Have you ever wondered why the money in your bank account seems to buy less and less over time? That's often due to inflation, where governments can print more money, decreasing its value. But what if there was a type of money that couldn't be printed endlessly? Enter Bitcoin. Here's the mind-blowing part. There will only ever be 21 million Bitcoin in existence. That's it. It's written into its code, and no one can change it. This fixed supply makes it fundamentally different from traditional currencies. Think of it like digital gold. Just as there's a finite amount of gold on Earth, Bitcoin has a fixed, predictable supply. This scarcity is what makes it a powerful hedge against inflation. As demand grows for a limited asset, its value has the potential to increase. It's a revolutionary concept in the world of finance. Have you noticed who's getting into Bitcoin lately? It's not just us anymore. The big players are finally joining the game. We're talking about major banks, massive hedge funds, and even entire countries. They're starting to see Bitcoin not just as some digital fad, but as a serious long-term asset. Think about it. When these institutions with billions, even trillions, of dollars start buying in, what do you think that does to the value and legitimacy of Bitcoin? This isn't just a small trend, it's a massive shift in the financial world. The slow and steady adoption by these giants is building a stronger foundation for Bitcoin's future. It's an exciting time to be involved, and this could be just the beginning of something much, much bigger. What are your thoughts on this? A big part of the answer lies in a special event called the halving. So, what is it? Think of it like this. Every 4 years, the reward that Bitcoin miners get for creating new coins is cut in half. This means fewer new Bitcoins are entering the market, making the existing ones more scarce. Historically, this increase in scarcity has been a huge deal. After past halvings, we've often seen significant price surges. It's basic supply and demand. When supply shrinks and demand stays the same, or grows, the price tends to go up. The next halving is always a hot topic in the crypto world, because it fundamentally changes the economics of Bitcoin. It's a built-in feature that makes Bitcoin a deflationary asset, unlike traditional currencies. Think of it as a super-fast express lane built on top of Bitcoin. Will regulation kill Bitcoin? That's a question on a lot of people's minds. The short answer, not a chance. Here's why. Governments are definitely looking to regulate the crypto space, and we'll likely see more rules for exchanges, the platforms where you buy and sell. Think of it like regulating stockbrokers. This could even bring more stability and trust to the market, which is a good thing for long-term growth. But here's the crucial part. They can't shut down Bitcoin itself. Bitcoin is a decentralized network, running on thousands of computers all over the world. There's no central office to raid, no CEO to arrest. You hear a lot about CBDCs, central bank digital currencies, and you might be wondering, what does this mean for Bitcoin? Are they going to replace it? Well, let's break it down. Think of it like this. CBDCs are essentially the digital version of the cash in your wallet, issued and controlled by a central bank. They're centralized. Bitcoin, on the other hand, is the complete opposite. It's decentralized, meaning no single entity, no government, and no bank controls it. It's like digital gold. So, can they coexist? Absolutely. You might use a CBDC for your daily coffee run, just like you use your debit card now. But Bitcoin will likely remain that independent, global store of value, a hedge against traditional financial systems. They serve different purposes, so instead of one replacing the other, we're likely heading towards a future where both have their own important roles. Thanks for watching, and don't Bitcoin mining and the environment. Think solar, wind, and hydropower. Why? It's not just about being eco-friendly. It's also about economics. Renewable energy is becoming cheaper and more reliable. This means miners can lower their operational costs and become more profitable in the long run. So, the future of Bitcoin isn't just digital, it's also looking a lot greener. The network is becoming more sustainable every day, which is a win for both the crypto world and the planet. Have you noticed how Bitcoin is slowly but surely making its way into the big leagues? It's not just for early tech enthusiasts anymore. We're talking about major players like big banks, powerful hedge funds, and even entire governments starting to see Bitcoin as a serious, long-term asset. This isn't just a fleeting trend. It's a fundamental shift in how the world views digital currency. When these massive institutions start buying in, they're not just dipping their toes in the water. They're building a foundation for the future, bringing a whole new level of stability and legitimacy to the crypto space. This growing acceptance is a huge signal, suggesting that Bitcoin is here to stay, and its role in the global financial system is only just beginning.